Howdy, howdy. It is Ashley and Bill. And if you're seeing us together, you know that this is another mortgage moment. Bill, how are you doing?
Doing great. Happy Wednesday today.
Yes. I think the season is turning. It's about to get hot here in Texas. For those joining us for the first time, I'm Ashley Tullis. I'm a real estate expert in Central Texas. And this is my partner in all things money, Bill.Roegelein. And he is going to give us all kinds of tips and tricks. And today I wanted to understand, what is mortgage insurance? Do I need to apply for a mortgage insurance policy? What is this insurance? Who are we
No,
insuring?
good news, you don't have to apply for a mortgage insurance policy. So you'll hear a couple of different ways. People call it PMI or MIP, different ways, but PMI means private mortgage insurance. MIP means mortgage insurance premium. Mortgage insurance is part of a loan, and there's different scenarios of why you need it and do you have to have it and how to get out of it. But standard, your two most common first-time home buyer loans is an FHA loan, and then you can do a conventional loan. FHA loan, you'll always have mortgage insurance for the life of the loan. It's part of it. All right. So you can just kind of keep that there. It's black and white. There's no way of getting out of it unless you refinance and move into a conventional loan later down the road. Conventional loans where things can get not just tricky, but there's a lot of scenarios that can happen. So the way to get out of mortgage insurance let me start. What is mortgage insurance and why do you have to have it?
Yeah.
Mortgage insurance is an insurance that the lender or the bank has to protect themselves in case the borrower stops paying on the note. So it's a way to protect them and protect their money that they have loaned to the borrower. So again, let's talk about how to get out of mortgage insurance. For conventional loan, you have to put 20% down to get out of mortgage insurance when buying a house. So keep that in mind. If you can't put 20% down, don't worry. It's not the end of the world. We can still do the loan, but there would be mortgage insurance that has to be added on to the loan. And it varies in a lot of different ways. It first of all varies the amount of down payment. There's usually tranches, 5%, 10%, 15% down. Will change how much mortgage insurance could be. The other big thing is credit scores, and this is where they can't come into play. The higher the credit score, the better that mortgage insurance, the cheaper that mortgage insurance can be. So if you've got 15% down and your credit scores are 660, and someone that has credit scores of 720, the mortgage insurance will vary pretty significantly on those two aspects. So you will always have it. There's ways to get out of it later down the road. Say when you refinance the house, if you have enough equity in the house, say in 5 years you refinance and you put 15% down, your house has increased in value, which is why we all buy real estate, right? It's a great investment piece for us. You refinance and all of a sudden your house has gone up in value and now you have 20% equity in it. You can get out of mortgage insurance. Poof, gone. No longer have to pay it. But it is part of a loan. Have to put 20% down to get out of it. Or FHA loan, you will have it for the life of the loan until you potentially refinance out of it.
I'm curious, how much does mortgage insurance cost? Is it the same on every home, or is it property specific? Is it based on the loan? How is that number? How do they come up with that?
So back to credit score and how much your down payment is. That will determine, there's a lot of mortgage insurance companies out there. For an FHA and government loan, there's not a different mortgage insurance provider. It's just standard 0.55%. It's a percent of the loan amount is what you make a monthly payment on.
Okay.
Through it. And then same thing for conventional, as you can shop. We shop a lot of different mortgage insurance providers. We probably shop 5 or 6 different ones to try to look for the best mortgage insurance premium for the borrower. But yes, it depends on how much you put down, and it is a percentage of the loan amount that is part of your monthly payment, which you have to qualify with.
Awesome. Super helpful. What questions am I not asking that I should be about mortgage insurance? What I'm hearing is you really don't want it if you can not have it, right?
Yes, if you can avoid it, it is. It feels like kind of money you're throwing away. But the reality is I think we did a video, the myth of you don't need 20% down to buy a house. Don't think you need to save the 20% down because you don't want mortgage insurance. The reality is remember, we can buy a house for as little as 3% down potentially. Yes, you'd have mortgage insurance, but don't let it deter you, because it might be that house you've been dreaming of, right? Dying to get into.
Definitely. Awesome. Well, thanks for the tips and the playbook around mortgage insurance, Bill. Again, guys, this is my partner in money, issuing loans in Texas and a few other states. I'm Ashley Tullis, and we will see you next time for our next mortgage moment.
See you next week.